Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. This is Traders Corner. As always, I'm joined by Garth McKenzie, who is founder and editor of the Traders Corner concept and website. Garth, welcome.
Hi, Julieta.
It's been a nice couple of days if you've been long the market, because we've been setting new highs. But what do you make of the recent activity?
Yeah, certainly there's quite a bit of momentum behind the market at the moment, and there's definitely evidence of buyers at the lower levels. You can see each time we get a shallow little pullback, the buyers are there and they step up to the plate and take our market higher. So on the JSE All Share Index, we're pretty much trading at all-time highs now, and it does still look good. And we're going to have a look at the bigger picture now in terms of some of the overseas markets and our market, and see what the landscape looks like at the moment.
Well, no, you want to start off with the S&P 500. So what is that actually telling us?
Yeah, well, I've got the graph of the S&P 500 up on the screen at the moment. What's quite interesting here is that we've had a nice consolidation and pullback over the last month or so. If you have a look at the chart on the screen, the first thing that is evident there is this lateral level at 1430. Now, what that was previously, it was resistance. You can see the market bumped up there in March earlier this year, and again in August, and now we punched through that level in early September and went up to make a new high. Well, a new high for the year. In fact, I think about a 3-year high as well. And now we've been consolidating over the last month or so, and you can see that consolidation over there, and the market becoming quite oversold. What also is evident is that we have this upward trend, which joins the low points from the June low this year, and the market has come back to test that area. So we've got a double support area there, again at around about 1430. And the S&P 500 reversed up off that support level last night, which was quite encouraging. And then if you have a look at the stochastic oscillator, what we've got is called bullish reverse divergence. Now, I'm not going to go into the intricacies of explaining this, but in effect, what you can see there is we've got a situation where the stochastic makes a lower low, and yet the market has made a higher low on a relative basis over the same comparable period. So what it means is that the market is now more oversold now than it was on the previous pullback, even though the market's actually at a higher level this time. Okay. So that is what we call bullish reverse divergence, and it's generally quite a powerful setup. It's a bullish setup, as the name would suggest, and it usually preempts a move higher. Well, in this case, a move in the direction of the trend, quite a sharp move in the direction of the trend. And that certainly seems to be what we're setting up for here on the S&P 500. So I'm going to say that whilst we're above 1430 on this index, that picture to me still looks pretty bullish, and I'd put money on us going higher from here. Obviously, I could be wrong. We might fail and go down, but I think the more likely scenario is that we're going to see some upside from this level.
And if we take it back to the all-share and the top 40, it's been interesting because there has been a slight divergence in what's been happening on the US markets and what's been happening on our own market, and you've shown that sort of consolidation, but we've actually been trending higher. So there has been a bit of we're kind of out of step in a way with the US market.
We are a bit. I think what you've got to remember is that we've got the rand factor in our market, and with the rand having been quite weak over the last month or so, it does definitely put us out of step in terms of what our market looks like relative to the overall markets. A large part of our market is currency sensitive. We've got big dual listed stocks like Anglo American and BHP Billiton and British American Tobacco and SAB Miller and Old Mutual, Richemont, and these are heavyweight companies in our JSE Top 40 index, which make up a large component of that index. So what happens is when the rand weakens, those shares are consequently stronger because they need to make parity with their offshore listings, be it in London or in Zurich or wherever the case might be. So as a result, our top 40 index has been holding up fairly strong, and it does look somewhat better than what we saw on the S&P 500 there. And certainly also, to me, it looks like an overall fairly bullish looking chart still.
Okay, but you want to talk us through what you're seeing on the charts. I mean, maybe you're going to get to that, but the stochastic seems to indicate that we're slightly overbought at the moment.
Yeah, we're slightly in the overbought territory, sort of neutral to overbought. But I'm not going to pay a massive amount of attention to that today. I'm going to rather just pay attention to the actual price action of the index itself. Price is always the most important thing to watch, and then if you get additional confirmation from things like your stochastics and other technical indicators, all the better. But at the end of the day, the price is the most important thing. So if we have a look at the price of the index, what I notice here is we've got this uptrend going back to the July lows, and then we've got a little bit of a sort of a flat top there almost, which comes in at about 32,450 on our top 40 index. Now that to me is starting to look like a bit of an ascending triangle type of formation, and what you invariably do here is you take the height of that triangle at its broadest point and then you project it up from an area where it breaks out, and our market has been trying to break out through the top of that flat resistance area over the last day or two. So if we get a confirmed move out through the top of that resistance area, then I think it opens potential for our market for our top 40 index to move up to about 33,500. So it still looks quite bullish in my opinion, and I think as long as we hold up above that upward trend that's been in place since July, then I think you've got to remain in the bullish camp.
So 33,500 would be the target?
Yeah, that would be the target from this formation that I'm seeing here.
Besides the technicals, are there any other factors that may influence the markets, presumably the US elections?
Yeah, we've got the US election coming up in early November, if I'm not wrong, and you know, seasonally or typically if you go back and you look in history, the markets are generally quite strong in a US election year, and they do tend to move higher into the US election. So that's a couple of weeks away, so I would say that you know, seasonally or typically historically has been a fairly supportive factor for the markets, in addition to the technicals that I've spoken about here. So I think a couple of things lining up, but it generally to me still seems like the path of least resistance is upward for now.
Okay, so that's the overall context. Getting to the trade of this week, it's PPC. How does this sort of square into what you're seeing overall on the market?
Yes, okay, so I mean it's not a stock that's particularly correlated to the rest of the market, but I like what I'm seeing on PPC here for a number of reasons. So I'm going to go through all of these reasons bit by bit. The first thing that I see here, which is evident to me and is glaringly obvious, is this very large inverted head and shoulders pattern that's been playing out over the last 5 months or so. You can see the two shoulders there and the head in the middle as labeled. Those typically are bottoming patterns, and when the stock breaks above the neckline, which is that horizontal white line that I've got there, that usually indicates a break of that head and shoulders pattern, and it's usually a bullish setup. What you do is you would normally take the height of that head and you would project it up from where the breakout occurs. So that would give us a target here for PPC of 32 Rand over the medium term. Now we haven't gone up as high as that yet. The stock's broken higher, but it's actually come back over the last couple of weeks and been consolidating now, and it's come back to test the neckline, and it's found a bit of support at about the 27 Rand 50 area. If you have a look, in addition to that, there's also this upward trend which goes back to the July lows and joins all the low points from July, and that corresponds with the 50-day moving average, which is this orange colored line. So if you have a look, we've got a multiple support area here. We've got that uptrend support and we've got a lateral support. Then we've also, over the last couple of weeks, had what is called a falling wedge pattern, and these falling wedge patterns are typically bullish continuation patterns within a trend.
Okay.
And we've actually seen the stock breaking up out of the top of that falling wedge pattern yesterday and today. So that looks good. And then the other thing is, once again, we've got the same situation here where we've got bullish reverse divergence on the stochastic oscillator here, and this is the same as what I spoke about on the S&P 500 just now. It's where the stochastic makes a lower low, and yet the share price is making a higher low within its uptrend, and that is typically quite a bullish and powerful setup.
Is there any reason why you've shown the volumes at the bottom of the chart? Because you don't normally.
Yeah, what I want to indicate here is that you've actually got a situation, if you notice, that volume has been declining over the last couple of weeks. Whilst the share price has been coming down, the volumes have also been declining. And that to me suggests that the selling pressure is actually not that great. So by and large, we've got a slight upward trend here over the last few months, and in this correction that we've had, the selling pressure hasn't been very great. So in my mind, it means the sellers are actually quite weak, and we should, as has been the case on previous rallies, it seems like the volumes are stronger on the way up and weaker on the way down. So it supports the bullish argument.
Okay. Can it not also mean that there aren't many buyers out there? Because if the buying pressure was quite strong, then we would have seen more volumes and we would have seen a more convincing uptick.
But the thing is, you want to see, in the case of an uptrend like this, you want to see strong volume on the way up and weak volume on the way down. And then you get a situation where volume confirms price action. So overall, I see this as being quite an encouraging setup in terms of the volume pattern.
So have you actually entered into a trade?
Yeah, I have. I've gone in today at 28 Rand 70, and I'm using a stop loss here at 27 Rand 10. That stop loss basically would mean that the share would need to go below the lowest point of this recent pullback, and then it would trigger our stop loss.
So it's a fairly loose stop loss?
It's reasonably loose. If you have a look at the risk to reward ratio, I'm using the red and green blocks that I often do nowadays. The red block there indicates the risk, so in other words, from our entry point to where our stop loss is, that's represented by the red block, and then our potential upside is represented by the green block. So from our entry price up to our target price of 32 Rand. So eyeballing it, you can see that the risk to reward ratio is around about 2 to 1.
Okay, so can you take us through the mechanics in greater detail?
Sure. So we're buying it at 28 Rand 70, as I mentioned. Stop loss is 27 Rand 10. The risk per share, therefore, is 1 Rand 60. I'm risking 2% of our account, and our account stands at 398,000 Rand at the moment. So 2% of that is 7,960 Rand. I'm taking that portfolio risk and dividing it by the risk per share, and that gives us the number of shares that we can afford to buy to effect this strategy. And it's 4,975 shares. So I've decided in this case to actually round it up slightly to the round figure of 5,000 CFDs. So that's what I've done for our portfolio this week. And yeah, the target price is 32 Rand, which is 3 Rand 30 above our entry price, which therefore means that our risk to reward ratio on this trade is around about 1 to 2, which is favorable enough in my opinion to do this trade.
Okay, so not although you have traded PPC before a couple of times on the show.
Not this year, I don't think, but we've traded it in the past, yeah.
Okay, so that's the one to watch. Guys, before we get onto how the portfolio has performed, I know you want to bring up a point about tax and CFDs, because I think you're giving out porky pies when you told us all that CFD dividends are tax-free. It's not quite the case, is it?
No, it's not. So this is our own little getting it right column on the show here, like the newspapers do. I mentioned a few weeks ago that the tax on CFDs is, well, that it's tax-free, and the way I presented it is inaccurate. It was wrong. What I meant to say is that if you own shares and you receive a dividend, what you'll find is if you're in an individual or you're in a trust type of capacity, or you qualify to pay dividend tax, and what you'll see is on your statement you get a line item for the dividend, and right away below that you then get a line item for the dividends tax, which comes off right. Now, in the case of a CFD, you receive the cash flow of the dividend, just like if you were owning the shares. You don't see that dividend tax coming off as a line item on your statement. However, it is your responsibility as the trader to declare those dividends, and it actually forms part of your total profit on your trading account. So it's taxable at your full taxable rate on your trading account.
So you've got to come clean with the tax man when you do your returns,
you've got to come clean, basically. And the thing, if you think about it like this, if you own a CFD, that's a contract for difference. You don't physically own the shares, actually. So therefore, you don't qualify for the dividend in the true sense of what a dividend is in the definition. But you do get the cash flow of that dividend coming into your account. But it is actually taxable, and it's your responsibility as the trader to declare that dividend as part of your trading profit at the end of the year.
Okay, well, thanks for setting us all straight, Garth. We'll be on the line to our tax consultants. Garth, what does the portfolio look like? Not much difference, I imagine, from last week.
Well, no, because we didn't really have any significant open trades over the past week or so. So our portfolio is sitting on the same value. What we've got there now is our PPC position that we've just discussed on the show now, and then a few previous trades, our Rand dollar trade, our NASPAS trade, and we've got that option structure sitting in the background, which is working away for us in the background there. So our portfolio is sitting at just short of 399,000 Rand, so we're up 59.5% for the year to date. And hopefully this PPC trade will work out for us, and we can go over that magical 400,000 Rand number.
Exactly. And Garth, just to end off with, upcoming courses?
Yes, I've got 2 coming up, one in Johannesburg on the 24th of November, and then one in Cape Town on the 1st of December. So anyone that's interested in attending one of these 2 courses is welcome to email me, garth@traderscorner.co.za, or you can get hold of me on Twitter or on Facebook, and I'll then send you the information.
Great. We'll leave it there. Garth, thanks as always for joining us.
Thanks.
That's Garth McKenzie, the founder and editor of Traders Corner.
Traders Corner was proudly brought to you by IG. Visit igmarkets.co.za to open a trading account today.